Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. There are three major influences on the movement of stock price, according to a study by Benny King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red, technology is dark blue, financials are green, media communications are brown, industrials are purple, consumer discretionary are light blue, and all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. The movement in the sectors this past week were quite interesting. First, in the health sector, drugs went down, biomedicals went up, healthcare went up on Monday, crossed to the bull side, and then declined the rest of the week. In media communications, telephones and internets were unchanged. Media rose and crossed to the bull side, and then declined the rest of the week. In technology, semiconductors rose slightly, software climbed modestly, while computers and electronics both declined slightly. Consumer discretionary stocks were all down this week. Autos, which crossed to the bull side last week, went down and crossed back to the bear side this week. Gaming crossed to the bull side last week on a modest rise and crossed back to the bear side this week and went significantly lower. Leisure, retail, household products, and restaurants all declined. In financials, finance was unchanged. Savings and loans declined. Banks, after leading the markets for the past 4 months, really got nailed and crossed to the bear side. Real estate was unchanged. Insurance crossed to the bear side and declined rather sharply. Wall Street firms declined slightly amid the start of the rout in the markets. In the industrials, waste was unchanged. Building products declined a notch. Steel and aero defense were sharply down. Metals fell. Machinery tools were down significantly. Chemicals were also down substantially. The industrials were the most impacted sector on the downside this week. In the others group, on the bullish side, textiles crossed into the bear side and were down sharply. Food moved down faster than normal. Gas utilities declined. Oil services dropped, and oil was unchanged. On the bear side, forest products were down. Precious metals were unchanged. Electric utilities declined. Business products went down. Transports dropped significantly. Protection safety rose, crossed to the bull side, then declined the rest of the week. This week, 7 mini sectors remained unchanged, 9 rose, and 24 mini sectors declined. 3 sectors, drugs, gaming, and Wall Street, took a walk on the wild side and crossed to the bull side, and then declined Tuesday through Friday. We have 16 sectors on the bull side and 24 on the bear side. Last week, Monday, June 14th, the total market bullish percent score was 84%, and on Monday it moved from the bear side to the bull side at 86%, and then during the course of the week it declined and we finished the week at 72. For the week, the Dow Jones Industrial Average lost 1,189 points, or 3.45%. The S&P 500 was down 81 points, or 1.9%. And NASDAQ lost 39 points, or 0.28%. This is a chart of the Dow Jones Industrial Average. And an uptrend is in place when you have a series of higher highs and higher lows. The change in trend occurs when you then get lower lows and lower highs. Under Dow theory, which is 125 years old, a confirmation of change in trend occurs when the Dow Jones Transports confirms a trend change by the industrials or vice versa. That happened this past Monday. Paid subscriptions are now available. $15 a month on a month-to-month basis. $12 a month on an annual subscription, $144. And there's a 90-day free trial. Thanks for watching my Slay the Spider video this week. For those of you who are new, so far this year we've gone through about 8 of the events on the Slay the Spider Circle, and I called all 8 of them correctly. And for those of you who watched everything since January, you're welcome. See you next week. Thanks.